Imagine a military warship, 300 feet of steel, armed, fully crewed, flying the flag of a sovereign nation. It pulls into a friendly port in West Africa for a routine stop, but it never leaves. Not because of an act of war, not because of a mechanical failure, but because a hedge fund manager sitting in a glass office in Manhattan made a phone call, filed a piece of paper, and legally repossessed a navy. This actually happened. The year was 2012. The country was Argentina, and the firm that seized their ship was an American hedge fund. When a person goes bankrupt, the bank takes their car. When a company goes bankrupt, the bank takes their building. But what happens when an entire country goes bankrupt? You cannot exactly auction off the Eiffel Tower or foreclose on the Andes. Or can you? We're told that nations hold the ultimate power on earth. We call it sovereignty, the absolute right to govern oneself, immune from outside control. It's a beautiful idea, and in the world of high finance, it is a complete lie. Right now, beneath the headlines of inflation and geopolitical chess, there's a quiet, ruthless industry operating in the shadows of New York and London. These firms do not build software. They do not manufacture cars. They buy the debts of dying countries, and then they squeeze. They are known politely as distressed debt investors. The market calls them vulture funds, and they have mastered a very specific, highly lucrative art, holding entire populations legally hostage. Why does this matter to you? Because as global interest rates climb, the world is swimming in a historic ocean of sovereign debt. More countries are teetering on the edge of default today than at any point in the last 20 years, and the vultures are circling. To understand how a dozen guys in quarter-zip sweaters can bring a nation of 40 million people to its knees, you have to understand the life cycle of a sovereign bond. A bond is just an IOU. A country needs to build a dam or pay its teachers or fund a war, so it borrows money from global investors. It prints a piece of paper that says, "Give us $1 billion today and we will pay you back with interest over 10 years. Most of the time, this works. But eventually, a crisis hits, a revolution, a currency collapse, a pandemic. Suddenly, the country realizes they don't have the cash. They declare a default. Panic hits the markets. Regular investors, pension funds, mutual funds, normal banks, they rush for the exits. They look at this bankrupt country and think, we're never getting our money back. So the bond that was originally worth $100 crashes. It drops to $50, then $30, then $10. This is the exact moment the vulture funds walk into the room. They look at the chaos, the burning streets on the news, the terrified politicians, and they start buying. They buy millions, sometimes billions of dollars of this worthless debt. They pay pennies. Then they wait. The bankrupt country, desperate to rejoin the global economy, eventually calls a meeting with its creditors. The politicians say, look, we're broke. We can't pay you 100 cents on the dollar. If you accept 30 cents, we'll pay you right now and we can all move on. 93% of the regular investors agree. They take the loss, they restructure the debt. But the vulture funds, they say no. They say, we hold the original contract. You owe us 100 cents on the dollar, plus late fees, plus compound interest. This is where the math becomes entirely asymmetric. Remember, the vulture fund only paid 10 cents for the bond. If they force the country to pay the full 100 cents, they make a 1,000% return, risk-free. The country, naturally, refuses. They say, we're a sovereign state. We just restructured our debt. We're not paying you. So the fund goes to court. But they don't go to court in the bankrupt country. When emerging nations borrow money, Wall Street demands they issue those bonds under New York or English law. This is the invisible leash of the global financial system. So the hedge fund sues the country in a federal courthouse in Manhattan. And they win. Because legally, a contract is a contract. But winning a lawsuit against a country is just a piece of paper. You still have to collect. This begins a global game of cat and mouse. The hedge fund hires armies of lawyers, private investigators, and financial mercenaries to track the nation's assets around the globe.
They look for anything the country owns that happens to sit outside its own borders. If the nation has a commercial airplane landing in Europe, they seize it on the tarmac. If the central bank has gold sitting in a vault in London, they freeze it. If the nation tries to launch a satellite using an American company, they try to claim the rocket. They will intercept payments meant for a country's foreign embassies. They will freeze accounts used to buy medicine and fuel. They methodically blockade the country from the global financial system. The mechanism they use to do this is a tiny, ancient clause buried in the fine print of the bonds, called pari passu. It's Latin for on equal footing. The hedge funds convinced the New York courts that this phrase meant a country cannot pay the investors who agreed to a discount unless they also pay the holdouts in full. It was a brilliant, devastating legal hack. It meant that if the bankrupt country tried to pay a single dollar to the regular investors, the New York judge would hold the international clearing banks in contempt. The entire financial plumbing was shut off. They are given a choice: pay the hedge fund its massive billion-dollar ransom, or watch your economy completely disintegrate. If you ask these fund managers what they do, they'll tell you they're the immune system of the free market. They claim they're keeping corrupt governments accountable. They argue that if countries can just walk away from their debts, nobody would ever lend to the developing world again. They say they're defending the sanctity of the contract. And in a cold academic sense, there's logic to that. Capital markets require trust. Trust requires enforcement. But step out of the spreadsheet and look at the reality. The money used to pay these billion-dollar legal judgments doesn't come from corrupt politicians. It comes from the tax base. It comes from cutting the budget for public hospitals. It comes from halting infrastructure projects. It comes from intentionally devaluing the local currency, which wipes out the savings of the middle class overnight. The hedge fund extracts its 1,000% return directly from the economic suffering of a population that had no say in borrowing the money in the first place. It's a wealth transfer from the poorest taxpayers on earth to the wealthiest zip codes in America. And the stakes are escalating. For decades, this was a niche trade, a few ruthless players picking over the bones of serial defaulters in South America or sub-Saharan Africa. But today, the math has changed. The world is carrying over $300 trillion in debt. Dozens of nations, places like Sri Lanka, Zambia, Lebanon, and Ghana, are currently locked in brutal restructuring battles. And the game board has become infinitely more complicated. It's no longer just Western hedge funds fighting over the scraps. Enter China. Over the last 20 years, Chinese state-backed banks lent hundreds of billions of dollars to the developing world to build ports, highways, and rail lines. Now, as those countries struggle to pay, China is refusing to take the same haircuts as Western lenders. They prefer a different type of repossession. You can't pay the loan on the port? We'll just take a 99-year lease on the port itself. The sovereign debt market has mutated from a financial tool into a weapon of geopolitical control. And trapped in the middle are entire nations, paralyzed, unable to rebuild, their futures decided in closed-door negotiations between Beijing bureaucrats and Wall Street lawyers. We like to think of borders, flags, and governments as permanent things, the unquestionable foundation of the global order. But follow the money, and a much more uncomfortable picture emerges. A country is just a corporation with an army, and like any corporation, it can be leveraged, hollowed out, and liquidated. The real power in the 21st century is not held by the people who write the laws. It's held by the people who hold the debt. If a hedge fund can seize a sovereign warship, if a court in New York can dictate the economic survival of a nation thousands of miles away, then who actually owns the world? It's a question worth asking, because the next time a sovereign nation falls, the vultures won't just be waiting, they'll be holding the deed.